Hello, everyone. I'm Matt Bloom for Pekin Hardy Strauss, and I'm here with my colleagues Josh Strauss, Bill Pekin, and Adam Strauss for another episode of Managing Your Money. And today we want to talk a little bit about a timely topic that I think is going to be really top of mind for a lot of investors as we work our way toward November, and that's the big presidential election that's coming up and what it might mean for markets and investments. So as we all know, nowadays presidential elections are basically just a big spectacle. There's a lot of aggressive campaign ads, tons of spending, and wall-to-wall media coverage that makes sure that we don't miss a second of it. But if we push aside all the nonsense, there may be some real investment implications in election years that can create maybe what we'd call unique risks or opportunities for investors. And so that's really what I think we want to focus on here today. So to get us started, I have a chart here that I want to share. So this simply shows the full year S&P 500 returns in election years versus non-election years. And I think what we see here is that it doesn't seem to make a substantial difference being in an election year versus a non-election year, at least on a full year basis, right?
Matt, can I ask a clarification question?
Of
Is
course.
this just presidential election year, or is it, every 2 years?
This is actually an every 2 year thing.
Yeah.
So this is not necessarily just presidential elections, but it's still, I think it's still pertinent to this because we have congressional elections as well in this year. It's not just a presidential election. So, but the point here is that there doesn't appear to be a material difference in election years versus non-election years. However, I have a couple more charts that I think are maybe a little bit more interesting and maybe provide a little more actionable information. So this is the average S&P 500 path throughout an election year as you lead up to the election. And what we see is you in the early part of the year, you've kind of got this choppy period. Then you get into this general upward period, go back to another choppy period, and then a substantial upward trend as we get closer and closer to the election. And then this one here shows what the markets do, leading up to and coming out of the election. And I think what these show is that the market just it almost doesn't matter, who wins. The market doesn't like uncertainty. Right. And so as things become clearer leading into an election, and then obviously once we have clarity coming out of an election, markets tend to start to perform. So I guess, Adam, I'll start with you. Like, what do we do with this? Is this meaningful for us? Like, and do we just say, hey, you know what, as investors, let's just sit on our hands until, September, October, and then just push all our chips in, regardless of, who's leading in the polls? Is there anything that investors should take away from this, just in general? Like, does it just behoove us to invest right at the end of the year and say, forget about it?
Well, I think that the question that you're asking is sort of a market timing question, right?
Yeah.
You're asking, is it possible to make a top-down timing decision about the market based on the fact that it's an election year, based on how many days before the election we are, et cetera, based on what's happened in history? And I don't know. I think it's hard to make timing calls in general, and I don't see any reason to make an exception to the idea that it can be very dangerous to make timing calls. So, why do it during a presidential election? It's information that everybody knows. Everybody knows it's a presidential election year. Everybody knows there's an election going on, and everybody knows what's happened historically. I don't know what kind of potential edge any investor would have in making a timing decision related to the election.
Maybe it's a self-fulfilling prophecy. If everybody knows it, everybody knows that markets go up as you get close to the election. You take advantage of it.
Yeah, maybe.
Anybody else have any thoughts on that?
Well, I'll take a little different tack because yeah, I don't, to Adam's point, I'm not sure what to make of that. I think it looks like, markets certainly don't like uncertainty. I'll take it a little different way in because what I'm struggling with is what are recent elections in India and Mexico and maybe Europe telling us. And what do those elections have to say about our upcoming election, if anything? Just as maybe there were some hints with Brexit about what was going to happen here. One, I'll say I don't know how to interpret any of this really yet. It's also new. The one thing I think I'm beginning to grapple with is it looks like to me that Shine Bomb's or AMLO's kind of landslide, more or less victory in Mexico, is indicative of growing broad-based prosperity in the country that AMLO achieved and that she inherited, that party inherited, and which is why they want such a resounding victory, I think. And I think Modi's setback was because the prosperity hasn't been as broad-based. It's been more US-like, more narrow. So I think what that means is that I think you're going to continue to see what we've been seeing, politicians trying to give stuff to people, forgiveness of student loans. On one hand, Trump cozying up to the crypto industry on another. I think you're getting politicians who are trying to give out goodies as much as they can to get the population or the broad population on their side. And what I think that leads ultimately is I think it's inflationary. I think that I think wages for the broad middle of the income spectrum have to go higher, and I think politicians will push that as part of their agenda.
But it's interesting you mentioned that because I saw a report the other day from the IMF. I don't know if you saw this, but it was recent, and this is a global study they did, but they found that in election years around the world, deficits in election years are higher. Like basically they see like a 0.4% increase of deficits above what the expectations were going into that year. And so basically, I mean, it's what you're saying, right? It's that the move is, regardless of what party or whatever is in power, there is a significant sort of propensity to spend and make people, a broad base of people feel better when they head to the polls, which I guess then, as you're saying, inflation is a big topic for people as they're going to the polls this year. So, that sounds like kind of like a rock and a hard place though for like the incumbent administration, right? It's like you want to make people feel good, like they're economically well off, but you've already got inflation running kind of hot. Do you just let it run wide open all the way through the election and hope you win and then and then go from there? I mean, so yeah. What does happen with inflation the remainder of this year going into the election? And then depending on who wins, I mean, do we see something significant happening with inflation one way or the other, depending upon who wins?
Yeah, I'll try to I'll talk one more time and then I'll be quiet for a little bit. But yeah, I mean, I think you're asking the million or $1 trillion question, I don't know yet. I think that the path forward, as I described, is likely inflationary. I think, to your point, the inflation prints or expectations this morning were surprisingly high. It looks like inflation is the kind of Hollywood monster that can't be killed. It just keeps, the Fed is firing shots into it, and it just keeps getting up. And my worry is that this inflation monster won't be so easily defeated. That 5 interest rate rates isn't going to be enough, and that just as the last 40 years, basically, broadly speaking, was the ascendancy of capital over labor, as we saw in this country, as we outsourced jobs and as inflation remained low and as interest rates came down or went ever lower over the last 40 years, the biggest benefits accrued to capital. And as China became part of the World Trade Organization, we exported a lot of jobs and it was basically disinflationary, and therefore the workers didn't win or labor didn't win. And I think that something has shifted. I don't know if it was COVID. I don't know if it was COVID and the war in Ukraine, or now multiple wars globally, or the baby boomers aging, or the fact that we are decoupling incrementally or at the margin, decoupling from China and reindustrializing. All those things are inflationary. Wars and conflicts are inflationary. Deglobalization is inflationary. And so I think now maybe you will have the opposite. This is a long-winded way, I'm sorry, of what we had the last 40 years and what we saw in these elections, which is it's time for labor to be ascendant. And they're not going to stop. They're not going to stop wage increase. Wage increases are going up, and that's just not going to stop. And that's just going to continue to drive this overall inflationary environment. Now, what politicians do with that, I don't know.
Well, yeah, I guess that leads into the next question.
Actually, before that question, could I just say something? Billy, I broadly agree with everything that you just said, but I think that, one thing that is not inflationary in terms of the wages of labor is the historical surge that we've seen in immigration in recent years. I mean, I think that trend is going to have and probably is having an effect on the economy of dampening wage growth, because you've got a huge influx of supply of low wage workers, and so I do think we're sort of hitting an inflection point where labor should benefit more. But there are countervailing forces that I think exist too, and I think this is a big contrast between the two candidates. Because I think that President Trump has taken out a stance against the level of immigration that we've seen recently. So we'll have to see. But I mean, I think that could cause wages to grow a little bit less slowly and help corporate profit margins stay at its near record levels right now.
I think it's definitely a fair point, and there's definitely some speculation as to why the border was left so open. I mean, there's some people who believe that the point was to try to combat inflation by bringing fresh labor into the that will certainly, at least for a period of time, only affect a certain the really high skilled labor that's needed for a lot of industrials today is not there. Electricians and plumbers, that high skilled labor. I think you're still seeing inflation in those wages. It'll take time for new fresh labor to get up that skill ladder, but you're right. But of course, then the counter trend to that, of course, is you've let 8 to 10 million people, I'm not sure what the number is, into the country, and we already have a housing shortage in this country, and eventually that, just like skilled labor, eventually it'll feed into a worse housing.
Right. I mean, it's for sure inflationary for housing prices, without a doubt. Totally agree. Okay, Matt, I'm sorry. Go ahead with your next question.
Yeah. No worries.
I just wanted to bring that up because it seemed like the appropriate.
Yeah, it's the point. It's a good point.
Yeah. Well, I guess then, just sort of, following on to this, these sort of big picture trends that we're talking about, right, with inflation and deficit spending, and so then, what does it ultimately mean for equities, for bonds, and within equities, what does it mean for various sectors, right? This election. I saw something the other day. It said that in presidential election years, the two worst performing sectors are technology and materials, which I thought was interesting. Then there's no real historical trend for the best performing, because it depends so heavily upon the platforms of the candidates. But tech and materials have by far been the worst two performing sectors. But so, looking at this year specifically, with this inflationary backdrop that we have, with Billy, what you're talking about, the ascendancy of labor over capital, looking at the two different candidates, or the two main party candidates, what should we expect to do well given a victory for one over the other? In the equity markets, what do we think about bonds, gold, oil, right? All these kind of key markets. What do we think is going to do well? I mean, Josh, what do you think?
So I've been thinking a lot about the stuff that you guys have been saying, and thinking a lot about the implications of the Mexico election, the Brazilian election, and the French election that's coming up. That's raising its ugly head right now. And when I think about the two primary candidates, and I think about how things will change. I think with right now, if you look at the CBO, Congressional Budget Office, the forecast for the deficit, it's a hockey stick chart. Debt as a percentage of GDP, and our spending, 2/3 or 3/4 of it, I can't remember the exact number, is three things. It's defense, it's Medicare, Medicaid, and Social Security, and neither of these candidates want to touch any of that stuff. And so there's, I don't see that hockey stick changing much. If Biden is reelected, with a mandate to continue what he's doing, I think that hockey stick continues. Whether they raise taxes or not, I think the impact on the deficit is not going to be that significant, because if you raise taxes, it's going to have a negative impact on economic growth. So it's kind of a mixed bag on the impact to the deficit. If Trump is elected, the interesting thing here with Trump is what he does and what he says he'll do. I mean, there's some revolutionary changes that he's talking about of late, like getting rid of the income tax and just putting a huge tariff on imports in order to make that differential. I don't know what will really happen. What I do know is that Trump's not going to touch the Defense Department, Medicare, Medicaid, and Social Security. Any politician who wants to keep his job, even if you're a lame duck president, which both these guys theoretically should be, are not going to touch those issues. It's too explosive of a political issue. So that's going to continue. The question is more on the revenue side than tax issue, on whether or not you're able to have that impact. So if Trump, just cuts tax, and the lever that Trump might use is how taxes, whether it's import taxes replacing income taxes or not, who knows? But I'm just not sure it's going to make that big of a difference. So the end of that whole intro is that inflation of some consequence is our only way out of this debt issue we have. And by the way, now interest expenses is a larger percentage of GDP. It's bigger than the Defense Department now. And we have 2 wars that we're funding, at least with cash and equipment. So if we have that inflationary setup, you're going to see, poor returns in bonds. If you look at the 1970s, the last time we had a decade of inflation, there was 2 sectors that had a positive rate of return after inflation, and that was gold miners and energy and basic materials. So the equity side, those are areas that should perform well in an inflationary environment. The economy is different. There's a lot of other businesses that have pricing power in a different way than in the 1970s, so those should do okay. Assets that are finite, like precious metals, should do okay. But I think a lot of the more cyclical sectors and high-priced growth areas are going to see, valuation compression.
Anybody
The way,
else?
the way I see a lot of what you just said is that it's not, that none of this is an election issue. I mean, it's a government issue. It's a macroeconomic issue. But I don't know. I mean, whether President Trump wins the election or President Biden wins the election, I don't think that would change my inflationary outlook one bit, one way or the other. I mean, they'd have different spending priorities,
Yep.
Trump would probably lean towards more of, cutting taxes, and President Biden would lean more on increased spending. But, I think we can expect large deficits either way, especially since that CBO forecast that you were talking about with the, ballooning fiscal deficit. I mean, that's like with no changes in law whatsoever. That's just related to aging demographics. So I don't know. I don't see any of this. I mean, I totally agree that all of this is inflationary. I just don't see it as an election issue per se.
Right. I agree with you 100%, Adam. I mean, the president of the United States, has the ability to do two primary things and a lot of minor things. The two primary things are to govern foreign policy and lead that aspect of the government, and choosing nominating judges. To make big changes in the economy and big changes in spending, he needs Congress's help. And so just on his own, if Trump wants to make some of these revolutionary changes, like getting rid of the income tax and slapping big tariffs on foreign imports, that's all fine and good. He can't do it without Congress. If Congress isn't going to do it, it ain't going to happen. So, you just can't see that. And the funny part is that so many pundits are talking about a president having so much impact on the economy, and they do try to take credit for it. But at the end of the day, the data doesn't show that out.
I think that right there is the point that, like, that's really the overarching point here, is that presidents have less impact on economics and markets than people like to ascribe to them. And I think that's even more true now than it has been in recent history, because of exactly the situation you're describing, Josh, which is the massive ballooning deficit and debt, and inflation that is difficult to kill and may get worse, due to the just factors that presidents have zero control over. I think a lot of this stuff is just, it's bigger than any president can impact, and it sort of doesn't really matter who wins, at least from an economic standpoint, or from a market standpoint, because these forces are so much bigger than the presidency. I mean, that I guess that's sort of been my takeaway. But does anybody have a different opinion? I mean, like, for example, Josh is mentioning foreign policy and talking about some of the things that might be different between Biden and Trump. I mean, should we be expecting a different approach to foreign policy or to trade policy? And would that have any impacts on where you would want to have your money allocated?
Well,
go ahead.
On the rhetoric side, Trump is clearly more of a protectionist. His whole platform is America first, right? So what does that mean? It means he's going to, reduce immigration. It means he's going to raise tariffs. I mean, we saw that happen during his first term. On the other hand, while the rhetoric is different, President Biden has also raised quite a few tariffs. So, it goes back to, does it really matter? We're in an inflationary world. We're going to be seeing increasing tariffs. We're going to see increasing trade protectionism, and all of that is going to be very inflationary. And maybe there'll be a little bit more with Trump than there will be with Biden, but I think it's going to exist regardless of who wins the election, and therefore it's inflationary.
Yeah, I would have to agree. I think, Adam, I think economically, I don't think it'll matter much who wins. I think economically it'll be very similar. That's what I believe. I mean, at the margin, you may get higher taxes under Biden and lower taxes under Trump. I think that, to your point, that Trump is a protectionist, or his campaign as a protectionist, and certainly was during his first term. But Biden surprisingly has been pretty. He just slapped a bunch of tariffs on Chinese goods and solar panels and electric vehicles, and he's proven to be a protectionist to some degree as well. So I think that tariffs will be part of both of their administrations. I think the spending will continue under both of their administrations. Both of them have been big spenders. The foreign policy question is an interesting one, and maybe that's a bigger point of difference. I think, to simplify things, I think Trump is an America first candidate, and I don't know what that means for our allies. I think he will try to withdraw more so than Biden, will be less engaged globally than Biden has been, and I think Biden believes the world is divided into democracies and autocracies, and there are good guys and bad guys. But how that plays out in foreign policy, I'm not sure. I just see a more isolationist America under a Trump. But at the end of the day, economically at least, I don't think it matters very much who wins this election. I think the policies will be shockingly similar.
Can we dive in a little bit about the two wars that are happening right now, the two primary wars globally, the Russia-Ukraine one and the war in the Middle East? And we know what Biden wants to do and can continue to support Ukraine and Israel right now. And I think about if Trump is elected and that support diminishes for either, what the implications are. I'm just kind of unpacking that right now in my head. I'm thinking, like the Germans are terrified right now that, as an example, that Ukraine is the first step of several for Putin, and he'll continue to, try to reconstitute the former Soviet Union, whether it's, he stops Ukraine or keeps going. I don't know. I'm not sure. If that is the case, it's that's very bad for economic growth globally, right? So whether that happens or not, I'm not sure. And then if you look at the Middle East, Middle East wars over the last 75 years have been bad for economic growth because you've seen big spikes in oil and gas prices and higher inflation. Whether it's the 67 war or the 73 war, those two Middle East crises, were bad for economic growth as well as the first Persian Gulf War. So to the extent to which these wars are continue or not continue have a significant impact on global economic growth, I would think. Any thoughts on that, guys?
With Ukraine, it sure seems like part of the reason of the start of the war was related to a fear that existed on Putin's part that NATO was going to expand into Ukraine right next to his border. And Trump is sort of a NATO skeptic and, has said, look, I'm going to, when I become president, we're going to bring peace to this whole situation very quickly. It never would have happened on my watch, et cetera, et cetera. It's rhetoric, but I sort of feel like pretty quickly, if Trump wins, pretty quickly after Trump wins, he's going to sit down with Putin and they're going to carve out some kind of a peace agreement. And it probably means that some sections of Ukraine get carved out and become part of Russia. It probably means that there's some guarantees about NATO expansion. Probably somewhat along the similar lines that my understanding is in the news that Putin was sort of offering today. I think it's going to come down to something along those lines.
So legitimate point.
Yeah. I think with Israel, I think I think as a so-called America First president, I think he's going to be less inclined to be shoveling a bunch of money to, either the Israeli side to fund the war or to the Palestinian side to fund humanitarian relief. I think he's going to want to just say, this is not our game. We're disentangling ourselves and let the chips fall where they may. I'm guessing. I'm speculating. I really don't know. But
yeah, except a lot of
the
evangelical base is very supportive of Israel. So that may or may not, that one's a little more complicated than the Ukraine one, I would think. Maybe.
Fair point.
But then again, like going back to the original question, what are the investment implications? I don't know. I think I think probably peace in Ukraine, if it came about, would be less inflationary. There'd be less money being spent on the war by both sides. Maybe if everything goes right, perhaps there's a way to undeglobalize the commodity and energy markets that became so deglobalized in 2022 after Russia invaded Ukraine. It may be too late for that, but there's a possibility for that. That could be somewhat deflationary. I don't know. With Israel and in their war in Gaza, I think it's just such a small regional war that it just doesn't have. It's just not, unless it expands and becomes a bigger deal. It's just not enough to to matter for the global economy or global capital markets.
But wasn't that the case for 67 and 73 too?
Well, 73 resulted in an oil embargo, right? So that's, that expanded and affected the global economy. So again, if this expands and something similar happens, then yeah, of course that'll be a different story. But if it just sort of stays at the level of conflict that exists today, I mean, we haven't seen any change in oil prices since the war between Israel and the Palestinians started.
Right.
I wonder if instead we're not asking the right question. And I mean, it's interesting to talk about how a President Trump or a President Biden in this next 4 years will affect things, and maybe it's all for naught, and maybe the most important question really, I think, as Adam talked about before, it's how much impact does the president really have. Maybe the most important question is to paraphrase what James Carville said in the early 1990s. He said, "When I die, I want to come back as the bond market, because then I could scare everybody." Maybe the most important question hanging over everybody's head here is what happens to the U.S. bond market. If, to borrow what Charles Gove has said, we are in a reverse Asian crisis in the West, because, as Josh said, all of our debt payments, interest payments, and debt levels look like hockey sticks. If the Asian crisis of the late 90s is coming for us, we've already seen UK gilts blow out about 2 years ago under the Truss governments, their budget assumptions. We're seeing right now today the French government and French bond yields blow out today, and French banks tank on what's going on with their borrowing costs and political instability. And one wonders, at what point will that moment come for us? Right? Yes, we have the reserve currency, but otherwise we're not very different than the UK or France. And I think if that happens, then does it really matter if we have a Trump or a Biden or somebody else in office? What happens then when ultimately the bond market wakes up and James Carville's point comes true, and the bond market of the 90s and 80s wakes up again? Then what happens economically? And that I think is maybe the most important question, the most unanswerable question.
Mm-hmm. What was that famous quote that Rahm Emanuel had about being in a crisis?
He said that you never waste a crisis, or something like that. He said that. Yeah.
So, like, I hadn't thought about this, but as you brought up this idea of an Asian financial crisis, this isn't something that's going to happen now. It's not going to happen right after we know who the president is. But let's assume when the new president is sworn into office, that actually happens. There is some kind of a massive Asian financial crisis that basically hits the United States. Okay, so I guess that might be where it does matter who the president is, because you're now in a crisis. You're in an emergency situation. You're looking for leadership to help your country get out of crisis. And my guess is, because their view of the world, their view of what an economy looks like, et cetera, are so different that they may actually have some opportunity to lead in terms of economic policy. Like what happened during the Asian financial crisis is that it was solved with massive, huge, permanent structural reform. Okay, and so Josh earlier said, nobody's going to touch Social Security, nobody's going to touch Medicare and Medicaid, and that's because there is no crisis. But when there is a crisis, then you've got two different people with two totally different approaches, and it may be that the way out of those crises could be very different depending on which person is elected president. Yeah, because they'll all be looking at this thing of, okay, now there's a crisis, and never let a crisis go to waste. So I'm not going to let this crisis go to waste. I'm going to enact all these policies that I've always wanted to do, but it was always politically impossible before. But now that we have a crisis, a lot of these things I've wanted to do can be done, whatever that is.
Yeah, I think that's a really good point. And maybe here's another difference. If there is any trigger that triggers this, it might be a Trump presidency, right? Because one thing we didn't talk about is, and one thing that's speculated about, if Trump gets in office, his penchant for lower interest rates is there. His penchant to meddle with the Federal Reserve is out there, right? So, if anything, maybe a Trump presidency, if he comes in and really tries to impinge on the independence of the Federal Reserve, and if he really tries to muscle down interest rates, perhaps that sparks that is like the match, just as the UK budget was the match in that new administration that lit off the gilt crisis. Maybe a Trump presidency and his meddling is the spark that lights off this powder keg of a bond crisis, and then how he deals with it, I don't know. I think the bond crisis is coming, to your point, if whoever who's in office, and maybe it's not now, maybe it's after 28, but I think it's coming. And I think your point is, how we deal with it is critical.
I mean, that's just such a, yeah, that's a big question. I mean,
Good question.
Yeah.
and yeah, I mean that, and then the issue there is it's a, timing. It's like, it could be in 25, it could be in 2030, we don't know, right? But we have to allocate capital between now and when it happens. And
But you're right, and Adam, and these are very hard questions. If I'm right that we're in a pro-labor world and this crisis hits us, how do you cut Social Security and Medicare benefits in a pro-labor world? Now, maybe it happens, and if you don't cut those benefits, then what happens? I don't know. Is the escape valve the strength of the currency? Is it just inflation?
yeah, these are,
Well, with enough inflation, I mean, if we do have an Asian currency crisis, I'm trying to remember how much those currencies declined by, but it was like a significant percentage, right?
Horrible.
Like,
It was horrible.
it's like
40,
75% or
yeah,
something like that.
exactly right. At least 40
Okay.
to 70, right?
All right. So let's say there's an Asian style currency crisis, and the dollar depreciates by 75% over some short period of time, right? All right. Debt problem solved.
The debt problem solved. Explain.
Well, if the dollar depreciates by 75%, that means that nominal GDP quadruples. I mean, because of inflation. So you've got nominal GDP quadrupling. The debt really doesn't change very much. So now suddenly your debt to GDP ratio is completely right-sized.
Yeah, interesting. But you probably have inflation that's out of control.
Yes, that's what right-sizes the debt, right?
Yeah, right.
Right.
But I mean,
If
yeah,
there's
yes,
but you you mentioned an Asian financial. So
Yeah.
if that comes here, and if that term means
Yeah.
that your currency depreciates by 75% in a very short period of time, if that happens here, that will be terrible. It'll be horrible. It'll ruin the general standard of living in the United States, make it way worse. But it will also solve the debt to GDP problem. I'm not advocating it for anything like that, but like that would be that's the silver lining.
so I guess the big takeaway here is that this election probably has a lot less of an impact on in markets and big picture economic trends than we're going to be told that it will, right? I mean, all we're going to hear between now and November is the different sides telling us how important it is that one side wins versus the other, and what it's going to mean for investors and workers and whatnot. But in the end, I mean, what I'm taking away from the conversation here is that it's probably only going to matter on the margins, because we've got some really, really big economic things sort of bubbling under the surface that can't really be changed by any one person or any one set of policies. So
I'm curious, like, I think we're having this video because we're receiving a question. I mean, I received a question this morning, but I'm receiving it all the time.
Mm-hmm.
What are you doing to position for the presidential election?
Yeah.
It's a very open-ended question like that. And I think that's what we're talking about in this video, but I'm curious, like, how are the three of you answering that question?
I'm not allocating materially differently than I would in any other year. I mean, I certainly, I guess the way that client portfolios are allocated is really to respond to these economic forces that we're discussing rather than the election. I guess. I own, my clients own a lot of gold, but that has more to do with the currency situation and inflation and things like that than it does with who I think will or won't win the election. Now certainly if there's a lot of just plain uncertainty in markets between now and November, then gold may be a beneficiary because it tends to benefit from uncertainty. But that's not why I own it. But I can't say that I've made any material changes in allocations to client portfolios because of an election. Because going back to what we've said, I don't know that it matters that much. Certainly not to the point that I think I want to take a bet on something that I wouldn't normally.
Yeah, and as I say, I think that that's fair, Matt. And as I said, I don't really think it matters. I think the election is too close to call, so I don't know how to hedge a Biden or a Trump victory because it's so close. So I don't know. I'm not going to change the portfolio to bet on one horse or the other because I just don't know. And two is, as I said, economically, I don't really think it matters very much at the margin who wins, and so it doesn't make sense for me to change the portfolio. To your point, Matt, and what you to come full circle, you showed that second or third chart, which shows what the market does on average post election day, and it's up and to the right. Now, listen, perhaps this time is different. I don't know, but generally, once you get through this period of uncertainty, the market tends to push higher, at least in the short term aftermath. So, I'm not going to cash right now for the same reason that I think that on average markets tend to lift post election. So that's a long-winded way of saying I'm not doing anything differently than I am right now.
Josh,
What? What's
are you doing anything specific to I mean, and how are you responding to clients? And
I'm not. I mean, for the reasons that I said earlier, like both. I believe that we are in for an inflationary environment. You're gonna have ups and downs on acceleration of inflation and deceleration of inflation, but no matter what happens, it's going to be inflationary. The deglobalization trends that got kickstarted under the Trump administration continued under Biden. If Trump comes back or doesn't come back, that's gonna continue. We're gonna see more inflation. And I don't think investors are focused in on it. I mean, I think that either way, you want to figure out, there are broad themes that matter, but who's sitting in the White House and working in the Oval Office has far bigger implications for other issues and not, the health of the stock at the bond market and the currency markets.
Yeah. Okay. Well, I mean, I think, we all kind of, I'm sure we all have our own thoughts on what's going to happen and whatnot, but it sounds like on this, we sort of have a consensus that everybody sort of agrees that it's not so much about the election. It's about the big picture here. So anybody have any final thoughts they want to share before we sign off?
I think, the one thing that we didn't unpack that much is that I just, separate from the U.S. election is the varying responses. What's happening in France right now is kind of interesting because you've got a far right party coming into power for the first time in a long time, looks like. And it's surprising to me, the extent to which the bond market and the currency has sold off since. And, France is a different animal, but that part of it I find kind of interesting. I wish there was some learnings that we could have of it from the U.S. Election, but I just don't see it.
Come up with anything, share with us.
You got it.
Okay. Well, I think we've kind of beaten it to death, but appreciate all the insights, guys, and thank you for all your thoughts, and we appreciate all you folks listening to what we have to say. Take care.
Thank you.